Hey guys, welcome to the Avery. Today is the 1st of October, so we thought that we would run with the theme of Halloween, and our topic for this month is going to be taking the scary out of home loans. So my topic for today is about when is it the right time to see a mortgage broker. So a lot of people find that they put this off because they feel maybe they're not ready, they might not have enough in savings, or they've still got some debts that they want to clear off first. But we always say meet us first, because even if you aren't ready, we can give you some tips on how to prepare, and maybe you are actually ready and good to go with an application, so you never know. Another part that people find scary about reaching out to a mortgage broker is that they feel like it's just a different language. So we try our best to explain things as easy as possible, and also take out the jargon, or if we do use the jargon, we'll quickly explain exactly what we mean by that term. So please don't feel scared at all to reach out to a mortgage broker. We're here to help.
Hey everyone, continuing on this month's topic, which is taking the scary out of home loans. Today I'm going to focus on the 30-year loan term and whether or not you can make those repayments. I know when people start looking at their very first property or upgrading their home, they look at that 30-year loan term, they calculate how old they'll be when they finish this loan, then they look at those repayments and work out, can I actually afford these over the next 30 years? Now, we get asked this question, can you afford the loan? What percentage of my income should be allocated towards a home loan? There's no perfect answer because everyone's situation is unique. Everyone has different amount of expenses, and that will determine what they can afford to repay on a home loan. The easiest way to give yourself peace of mind around the home loan repayments and your affordability is to do the budgets. You need to have a look at what your spending habits are now, put them into a spending planner, and have a look and see where that money's actually going and what's left over at the end of the month. So my best tip for this one is put all your information into the budget, all your income, have nothing left on the mortgage repayment, and see what is left over at the end of the month. Is there enough to cover the mortgage repayment, or is there not enough to cover the mortgage repayment? And once you've got a basic idea, then start to play around with these figures and say, well, what happens if the rates went up? Could I still afford those repayments? What happens if our income went down or our expenses went up? Could we still afford those repayments? And running those budgets will give you an answer, yes or no, whether or not you can afford it. And that's how you can give yourself peace of mind. So that's the only way to do it. There's no shortcut to it. Run the numbers, see if we've got income left at the end of the month, and hopefully that will give you confidence going forward. Any questions, speak to the team here. Chat soon.
Hey guys, welcome to the Avery. This month's topic is taking the scary out of home loans, being the month of October. One of the scariest things that people are worried about when they do apply for a home loan is getting declined. So as a mortgage broker, we don't submit your application if we feel like it is going to get declined. Sometimes the banks wouldn't actually decline the loan. They might just come back and say you can borrow a bit less than what we'd originally applied for, or they might add some conditions to the approval. But sometimes the reason for the decline is that you haven't disclosed everything to us, and so that's why we say we're on your team, and you're better off to disclose everything about your financial situation to us, and that way we can look to ways to address that, so that the application has more success of approval. So it's really not that scary. It's definitely worth starting the process.
Hey everyone, Nathan from Birdie Wealth. I'm continuing our topic this month, which is taking the scary out of the home loan process. Now, without a doubt, one of the most rattling parts of the process is when you sign on the dotted line for your property and it's all yours, and you're now in a cooling off period. Generally in New South Wales, the cooling off period is only for 5 days. In that time, you have to have your finance approved, your contract checked, and your building inspection done. So let's work through all of those one at a time. The first thing with your finance is hopefully you've got your pre-approval arranged and you're moving towards formal approval. This involves the bank sending out a valuer and confirming that the price you paid is fair market value. So the first thing you need to do is check with your broker make sure that you have formal approval on your loan. The second thing you need to do is speak to your conveyancer about the contract and make sure all the terms and conditions are fair and that you agree to them, and get a tick off from your conveyancer that you're happy with the contract there. And the third and final thing is speak to the building inspector who's done the building report, see what they think of the property, and get a green tick from them. Once you have all those 3 green ticks, you are right to proceed through to formal approval, and the property's all yours. I hope that makes sense.